your first rental property is probably a bad idea. First rentals are great if you understand these things. The biggest mistake that people make when they buy their first rental property is they think that the first rental is going to allow them to quit their job. And they're basically gonna become a full-time landlord, and they're gonna get all this passive income and cash flow and live happily ever after. But the reality is that real estate is not a get rich quick kind of a strategy. It's actually get rich slow, because it takes time to acquire real estate. It takes time to build up enough real estate where you have the cash flow that then allows you to eventually stop working, right? So it is a long-term strategy, not a one rental and I'm done. What investors misunderstand about their first deal is that it has to be a home run. I see a lot of people basically die in the analysis paralysis phase. They don't get beyond analyzing the numbers, trying to find that perfect deal, when in reality, your first real estate deal just has to somewhat make sense financially, right? You still want to do all your due diligence and make sure it's a good deal, but it's not going to be the home run. It's not going to be the perfect deal. And that's okay. That's like in anything we do, right? We do it the first time, it's not going to be perfect, and we try and we get better. And for a lot of investors, their first rental property might actually even lose money too. You know, we try to avoid that, of course. We're not here to try to invest to lose money, but it does happen sometimes. You know, you might have a property where the cash flow is not really great initially, but you know there are things you can do to the property to make it a lot better in the long run, right? You can save up your money and over time slowly rehab the property. Maybe add an additional bedroom, maybe add an additional unit in the back. So sometimes it's okay for the property to be losing money at first, as long as you have a plan on how to make it profitable in the long run. Here's what you should understand before you buy your first rental property is that it is a business. So it's not a hobby. It's not something where, you know, you just put the money in and that everything magically works out itself. You run it like a business, meaning you run the numbers before you buy a property. So that way you know you're buying the right property, right? And when you make decisions on that investment, meaning, okay, am I going to refinance? You know, if I'm going to rehab this property, right? It's a money decision. It's a business decision. If I spent another $20,000, how much additional rental income will I get? That helps me to make that decision of whether it's worthwhile for me to spend the money to improve on my property. So just like with any other business, you know, your decisions should be backed by what the numbers tell you. One thing I see a lot of investors do is when they look for their first property, they put themselves into the shoes of occupying that space. So, oh, I really like this property because I can totally see myself here in the future. I can see myself here in the summertime. I can see myself here when I retire. And that's not a really good way to approach investing, because real estate investing is a business. So you want to look at a property from the lens of a business owner. Is this property going to make money for me? Rather than, is this a property I personally love and see myself in it? And that's a big difference between an experienced investor and a new investor. Newer investors tend to fall into that trap of, I like this property, you know, it's what we call falling in love, right? Falling in love with the property. Versus for experienced investors, a lot of times they don't even have to see the property, right? They can analyze the deal remotely. As long as the numbers make sense, they can pull the trigger. People think it takes a lot of money to invest in real estate. So I have to save up a very large amount of money so that I can buy real estate, when in reality, the majority of real estate deals are funded with loans, right? So what we're saving up for is the down payment. And even with the down payment, there are creative ways that you can get into deals without all of the down payment being your own cash, right? So it could be money you borrow from friends and family, or you could partner with other people. So the reality is it's much easier to get into real estate than what most people think. People who are fearful of real estate are always thinking about this midnight phone call to fix broken toilets. I don't know how many times I've heard that. Like, I don't want to own real estate. I don't want to manage a property because I don't want to be woken up in the middle of the night with a clogged toilet. When in reality, that hardly ever happens. I've invested in real estate for decades. I have never received a phone call in the middle of the night. The fear of these midnight phone calls, but in reality, there are so many ways you can avoid that. First of all, it doesn't happen frequently, hardly ever happens. And second of all, there are things you can do to prevent that from happening to you, right? So you can have property management companies, you can have other people who help out with the management itself so that you don't have to be the one woken up. And if you were woken up, you can always just call a plumber in the morning. Well, I think for new investors, one question I get a lot is, what's more important, cash flow or appreciation? And the answer is both. Whenever possible, we want to have cash flow as well as appreciation. But if I had to think of which one is more important, I would say it depends on you as the investor. So if you are someone who is really trying to get out of your job as quickly as possible and replacing your income, then you're looking at cash flow, right? Because cash flow is the money coming in every month. You need that to be working if you're trying to replace your paycheck that's coming in every month. You also could be someone who is planning to continue your career for as long as you can, but you want real estate to be a wealth building vehicle, in which case then if you had to choose between the two, then maybe appreciation is more important. You know, we oftentimes see appreciation over the long run be significantly more impactful than, you know, smaller amounts of cash flow that you might get from a property. So a lot of times what I see is if you're someone with high income already, you're probably not counting on cash flow for living expenses anyways. And that's where it may make sense to focus on appreciation as an investor more so than cash flow. But again, if you can do both, that's always the ideal. I mean, when it comes to taxes, we all know that tax law favors real estate. So as real estate investors, you get tax benefits. The law is designed to provide you with that, right? Unlike stocks, bonds, mutual funds, with rental real estate, we get to take what's called depreciation, which means the government allowing you to write off the purchase price of the property over time. And also just, you know, being a real estate investor, you're a business owner in the eyes of the IRS. So naturally you get to start to take tax deductions and write-offs against the rental income. And with proper planning, you know, we have a lot of clients who are able to use real estate strategies to not just offset rental income, but beyond that as well. W-2 income, business income, retirement income. The key though is understanding how to apply those rules to your unique situation. So the tax law exists, but not everyone can benefit from it the same way. And what you want to focus on is making sure you're investing in the right type of properties and doing the right things during the year so that you can personally save taxes using real estate benefits. Real estate investing itself really is a long-term strategy, right? Like I said, it's not a get rich quick, it's a get rich slow for most people. Really, when we talk about real estate, you're just looking at how do I put my money to work for me so that I am not having to work for it, right? The concept of rental investing is you are getting rental income every single month, and over time the property appreciates either through your efforts by improving on the property, or it appreciates through market appreciation, right? And so in the long run, it is the asset bringing you cash flow, building wealth for you, saving on taxes so you can reinvest that money into additional rental properties. Your first rental property could potentially be a bad idea, but if you are doing the right things, coming in with the right expectations, analyzing deals the right way, then your first rental property could be your stepping stone to building significant wealth over your lifetime as well. If you like this video, be sure to hit the like and subscribe button for additional real estate tax strategies.